Hello guys, welcome back to another Lumley trading video. In this one we are going to be doing some in-depth stock analysis, technical analysis over on AMST because it is one of the leading gappers today, up around 100% as we're recording this video. So what are going to be key supports from a technical standpoint if we continue or higher or lower? So obviously right now we're at around 60 cents. We have pulled back a bit. Now why? Firstly, have we started to pull back? So we can see it's 65, 80 cents, 70 cents and 86 cents. This is where we have our upper deviations. And what we can see is obviously pre-market today, we had a big move up and came straight into this level here, which was our third deviation over on the 1 year. And again, basically to the point, we came back, broke below it, came back to kind of test this one more time and failed. So again, this was quite an easy short opportunity if you trade pre-market. Again, I personally never trade pre-market or after hours, but that's again because I mainly trade options. And then we broke through, came back, and what happened? We came back to this next deviation. Basically, you know, missed it by I think about a cent or two. But again, came onto this level, and this is exactly where we started to sell off. So again, especially on a stock like this, and it's really good when you see this, when these levels work out really accurately, again, they tend to continue being really accurate on that same stock. So if it does continue high, we know these resistance levels are most likely going to play out quite kind of around that level. And again, from the support side, we can much better predict our supports. So if we did continue up again, we did have kind of one final resistance, and that's at 86 cents. But again, considering we were already above the third deviation on both the 6 month and the 1 year, again, this is considered extremely overbought. When we come to these levels, again, we always really tend to be hitting it short bias because we know 9 times out of 10 it's going to fall from above that level very quickly. Now, onto the support side, what am I paying attention to? And one we should be looking at now because we're about 5 cents away. And that's going to be 53 cents and 50 cents. Because again, these are our second deviation on both the 6 month and the 1 year. Now again, now we've added these levels, you can see we pulled back. Where did we pull back exactly to? That deviation. That was that confirmation. We held it. That's why we continue to that next deviation. And again, that's why it's so key to be watching both the support and resistances. You know, even if you're only bullish on the stock, it's good to know where are your confirmation levels if you're paying attention to supports. So again, we kind of came back down. We've confirmed this resistance. So it looks like, you know, right now we're probably going to kind of continue down. We'll be looking at 53. Can it hold? If not, we're looking at 50 cents. Now, 50 cents is going to be key because not only is it our second deviation over on the 6 month, but it is also a key psychological level. So again, if I'm holding it short, really that's going to be my target because I think it's going to get a bit more complex to trade once we come into that level. And so yeah, that would kind of be my trade plan if I was holding it short. Now if we can break that and we do continue lower, I'm looking at 36 to around 35 cents. Again, because these levels are so close, just use them as a range. Really, when levels are really close, just use them as a range because it's going to be much easier than playing them as individual levels. So that's going to be our next layer of support. Then if we break that, it's going to take us to the gap fill location. And again, when we trade these kind of gapping stocks, once they come and fill their gap, which again, 9 times out, well, probably more than that, they kind of come and fill their gaps, or they will come and fill their gaps, especially on these kind of just pump and dump kind of stocks. Again, maybe not so much in a pump and dump, but you know, news comes out, they pump really quickly, and then obviously people locking in their profits, it's falling back down. But yeah, really, once you fill that gap, you'll tend to see volume completely die out and dry out. And again, the opportunities, there'll just be better opportunities elsewhere. So really from 28 cents, I would completely abandon this stock and not even pay attention to it. But we do have statistical mean at 20 cents. Again, don't look to really open positions in statistical mean, but they can be used as targets because this is considered the fair value of the stock. And again, if you want support levels, we do have some at 5 and 3 cents. But again, probably not going to be a stock you really want to buy and hold. It's just if you play the momentum like on a day like today when it gaps. And again, it's just a quick day trade in and out. Anyway, I hope you enjoyed the breakdown on AMST. If you did, why not drop a like and subscribe and check out this analysis video.